This TradingView indicator is a real game changer. It boasts an impressive win rate of over 85% on Bitcoin and Ethereum. And if you want to try it out on major pairs and currencies in Forex or even on gold, it's going to perform even better because those assets and markets, as you know, are more technical friendly. Trust me, I did my homework on this one. Those winning trades you see on the screen, they owed their success to this tool. Before talking about all of this, did you know about this official Bybit giveaway airdrop campaign exclusively tailored for income nomad subscribers? Yeah, you do now. I don't want to waste your time more with that. Previously, I made a video about it. Hurry up, it's a limited time /participants offer, so make sure do not miss it. Watch that video, the link is above here and down in the description. But here's the best part, it's super user-friendly. With just a few simple rules, you can start making profitable trades almost every time. It really shines on a 15-minute chart. By the end of this quick tutorial, you'll be all set to start using this incredible technique and ranking in consistent profits. Now, without any further ado, let's dive into the tutorial. First things first, let me show you how to add this indicator to your chart. It's a breeze, I promise. Just open any chart on TradingView and search for liquidity concepts by Hunter Algo. This indicator is, without a doubt, one of the best liquidity indicators I've ever tested. Now, I know it might look a bit complex at first glance, but don't worry. I'm here to walk you through everything you need to know about this tool so you can easily spot those lucrative trade opportunities. The liquidity concepts indicator comes with a market structure detector and pivot points. It's all about identifying resting liquidity and setting your stop loss levels. The indicator plots lines on your chart based on market highs and lows. These highs and lows represent the market structure and are marked as HH for higher high, HL higher low, LH lower high, and LL lower low. When price breaks above the higher high for the first time, the indicator signals a chance of character, a bullish one. If it breaks the higher high again, it's a break in market structure. Conversely, when sentiment shifts from bullish to bearish, the opposite happens. The key feature here is the liquidity grab, or let's say liquidity trap, there are many names for it, or a stop loss hunt. This occurs when retail traders place their stop loss orders at the recent highs or lows. Fellow traders, if you find value in what I'm sharing, do me a favor and hit that like button and subscribe to Income Nomad, your channel. On this channel, I break down the latest and most effective trading strategies in the simplest way possible, so you don't waste any time. Now, big players are onto this. Try to push the market to trigger all those stop loss orders, giving themselves a better entry point. The indicator highlights these liquidity traps in green and purple backgrounds, and they often happen near support and resistance levels. This is one of the main issues with any trading strategy, even the powerful ones like price action, which you don't know what will happen, but with this strategy and this tool, you will. A bearish liquidity grab occurs when price breaks above the recent swing high and then promptly falls down. You'll see a candlestick with a large upper wick, a bullish liquidity grab. On the other hand, happens when price breaks below the recent swing low and then immediately rises back up, forming a candlestick with a large lower wick. Now let's see how this looks in practice. Imagine your strategy tells you to take a short trade near resistance. You open a position and set your stop loss at the recent swing high. Many retail traders do the same. That's where the trouble lies. Big institutions know this and they aim to grab that liquidity, executing those buy orders to get a better entry for their sell orders. What does it mean? It means they are going to take your money from you and then enter the market in the direction that it was supposed to be, but with more money. Or let's say not with their own money, but with yours. But we're not falling into that trap. We have this fantastic indicator that helps us spot these manipulations. So how do we use this indicator in live trading? Hold on tight because I'm about to reveal my exact strategy. Let's start with the conditions for a long trade. First and foremost, ensure that the overall sentiment is bullish. This is crucial. We're not in the business of trading reversals. We want to ride the prevailing trend. Next up, keep an eye out for a bullish liquidity swipe. These are candlesticks with a green or gray background. Any bullish liquidity swipes with a purple background should be ignored. Remember, we're not rushing into trades when a liquidity grab happens. That can be risky. Instead, we're patient. We wait for the market to return to the price where the liquidity grab occurred. But that's not all. We also want to see some buying pressure before we hit that buy button. Look out for a reversal pattern like a bullish engulfing pattern. Let's have a quick pause here. If you're a newbie, you're a beginner or rookie, and you don't know the whole concept of candlesticks and how to read them, don't worry. I've got you covered. Make sure to check this video right here. The link is above here and down in the description. This is crucial for you to know. It doesn't matter what market you want to trade on. It doesn't matter what is your time frame, what kind of trading strategy that you want to use. Reading candlesticks and be familiar with them is like knowing the alphabet before you start writing. It's a solid choice. If you're not into patterns, you can use the stochastic RSI instead. Another quick pause here. Another video about that. If you're looking for them, just make sure to check the link above here and down in the description. Watch for it to become oversold during retracement. And as soon as it leaves the oversold zone, that's your signal to open a trade. Both methods work like a charm. Now let's talk money management. It's straightforward. Set your stop loss just slightly below that liquidity swipe and aim for a profit that's at least twice the size of your risk. Alright, let's put all this into practice with an example. Take a look at the chart and tell me if you'd go long here. If your answer is yes, you're absolutely right. Every condition for a long setup we talk about is in place. Now, where should you place your stop loss? That's right, just slightly below that liquidity swipe, or let's say this level. Okay, let's shift gears and talk about the rules for a short trade. First, make sure you only sell after a bearish character change. You're looking for those red candle bars. Next, wait for a bearish liquidity swipe, which will show up as gray or purple backgrounds. But here's the key. Don't jump the gun. Wait for this zone to be retested. We're not rushing into a short trade immediately after a liquidity grab. That's a recipe for trouble. Instead, we want to see the market test that zone first. Then, and only then, open a trade if you see signs of selling pressure. It could be an engulfing candlestick pattern or the stochastic RSI indicating it's leaving the oversold zone. As for the stop loss, place it slightly above the liquidity take and aim for a profit that's at least twice the size of your risk. Now let's apply our knowledge. Look at this example on chart and tell me if you'd go short here. If you've been paying attention, your answer should be yes. The setup is valid with all the conditions met. Congrats! You now have a powerful tool in your trading arsenal. Use this strategy wisely, but remember to backtest and forward test it with a demo account, whether it's crypto or not. And if you're into doing crypto demo trading, make sure to check this short video over here and you're all good to go. Thanks for sticking with me through this tutorial. Until next time, happy trading!